Welcome, everybody. This is Stephen A. Williams, president and founder of creditrepairshop.com. I'm here to tell you that the CFPB is dead. The Consumer Financial Protection Bureau will cease to exist, and I have proof to show you that the groundwork is already getting put in place. Now, I know some of you might be saying, there's been other people who had videos. They were talking about the CFPB is here to stay, that nothing's going to change under the Trump administration. I'm here to show you. I'm going to show you an article that a lot of people probably don't even pay attention to these sources. These are like insiders, but it's here right in plain sight. And I'm going to show you from this article so you can see it for yourself that the CFPB is going to be on its way out. Now, right or wrong, some of the stuff CFPB did was good for consumers. And then on the other side, some of the stuff that the CFPB did was overstepping the bounds of what business owners were able to do to even run their businesses, the regulations of it. My own personal opinion is that whenever you have any type of federal government organization, agency, whatever you want to call it, in between consumers and business, in enacting regulations, you have to put someone in there that knows about business. And some of the things that the Consumer Financial Protection Bureau, some of the things that they enacted was from problems that consumers had with business. And some of those things were good. Some of those things were over regulated. But there also has been some disastrous things that they have done, which makes it almost impossible for a business to even be able to exist. And the only reason why something like that could ever happen is because someone who is in charge of putting together the policies never had to run a business, never had to do a payroll, never had to actually talk to customers and tell them about the products or services that they're offering. And so whoever was enacting those policies or resurrecting old policies and placing them on top of businesses to make it harder for them to exist, made it possible for what I'm about to show you to happen. And if we look at bottom line for everything, for what people say this election was all about, they said it was about the economy. They said it was about people not having money in their pocket. Could potentially some of that be because of overregulation? Could some of that potentially be because of the foot that they had on business owners' necks to change the way that consumers wanted to interact with business, to try to be the overseer, the protector of people interacting with businesses, and not allow people to make their own decisions and not allow business owners to be able to interact with potential customers the way that they felt that they would want to interact with them because it's their business. So now let's look at this. I'm going to minimize my screen here. This is from BHFS.com. Brownstein. This is a article, November 8, 2024. CFPB and FHFA on the list of agencies to see course change under Trump. As we continue to analyze the strength of former President Trump's red wave, one thing is clear: a number of federal agencies are poised for a major shift in their rulemaking agendas, priorities, and staffing and approach to enforcement. So look at this right here: approach to enforcement. Two agencies that may be particularly vulnerable to the political swings are the Consumer Financial Protection Bureau, CFPB, and the Federal Housing Finance Agency, FHFA. Their structure of having a single director, particularly after the decisions of what is that? Sheila law, whatever. Forgive me for butchering that. And Collins, which made the director serve at the pleasure of the president, means that the current directors will almost be replaced and likely take the agencies in a new direction. So now, one of President Trump's first actions upon taking office will likely include issuing a freeze on new regulations from executive departments and independent agencies. Other efforts to stall Biden's administration's rulemaking could include refraining from sending any proposals or final rules on Office of the Federal Registry, OFR, for publication in the Federal Registry, withdrawing from OFR any proposals or final rules that have not yet been published in the Federal Register, and postponing and considering postponing for 60 days the effective dates of rules that have been published. So, let me tell you some of the things that, hold on a second, I'm going to get my notes real quick. All right, so let's talk about some of the rulings that the CFPB has put into place that some businesses feel was either overstepping, and they say that these things are making it harder for businesses to be able to run their businesses and be profitable in certain products or services that they're offering. One of them was the personal financial data rights rule. CFPB finalized a ruling requiring financial institutions to provide consumers and authorized third parties with secure access to financial data. The initiative, known as open banking, aimed to facilitate easier switching between financial service providers and foster competition. Implementation is scheduled to begin in 2026 for the larger institutions, and by April 2030 for smaller. Critics include the Banking Policy Institute have expressed concerns about potential risk to data privacy and security, leading to lawsuit challenges. So from them from them linking your or our information and making it to be easily linked to another bank, to another institution, that this could solve problems. From what I see with the banking institutions is that they don't want to make it easier for people to be able to switch and move their stuff over to another bank. So, but that is, if you have a business, some of the stuff you got to see it from your, as if you were a business owner. Would you want to be able to share information with your competition at the click of a button? Would you want to be able to do that? I know that things are changing with banking. A lot of stuff is different, but there's certain things that you don't want to do, certain things that you want to do. And also, if there was any issues with who you transferred information to, and they had an issue with that, subject the bank that transferred the information to be able to be sued because of the issue that happened with the bank that they transferred, or the financial institution that they transferred information to. I think that's something that banks don't mind doing stuff like that. What it is that they would like to be able to enact these types of things at their own pace and at the interest of their institution, which is their right because they're a business. The next one was the buy now, pay later. CFPB issued a ruling subject to buy now, pay later companies, similar to the regulation as credit card issuers, includes obligations to investigate consumers' disputes. Nothing wrong with that. Issue refunds for returns products and provide periodic billing statements, which there's nothing wrong with that. The rules aims to enhance consumer protections in the rapidly growing buy now, pay later sector. Some industry stakeholders argue that the regulations could stifle innovation and limit consumer access to alternative financing options. The credit card cap late fee, CFPB introduced a regulation capping credit card late fees at $8, significantly reducing them from previous levels of $32. A change intended to alleviate the financial burden on consumers and promote fairer lending practices. However, the rule faced legal challenges, with opponents arguing that it constitutes regulatory overreach and could lead to unintended consequences such as increased interest rates or reduced credit card availability. Another one that concerned my industry with the credit repair industry is that enforcement of what is called telemarketing sales rule, which means that with only concerning credit repair companies, but also starting to make its way into other industries such as business financing type services, different types of coaching type business opportunity services, network marketing type companies. You're starting to see where they will not allow you to to speak about your product or service and sell that individual over the phone, that they would have to actually read your information and then make a decision for themselves. Now, for me, there's a good and a bad to it. One side, information on our website is always the same. Nothing, whatever is on there is what's on there. We stand behind it. Some people still say they would like to speak to someone before. Currently, in its current form with the CFPB telemarketing sales rule, the way that they're enforcing it is that you cannot even speak to an individual about credit repair until they become a client. What if the person says, I want to speak to someone before becoming a client because I want to make sure that it's right for me, I got some questions that I want to ask? How do you answer that? Do you know what we say and what I got blasted on my website due to the telemarketing sales rule? We cannot speak to you until you become a customer. So I predict that a lot of these things will be either evaluated, modified, or totally wiped out. With the one with the credit card $8 fee maximum on the late charges, that one was already struck down. The buy now, pay later, I believe that that's going to be struck down day one when Trump takes office. They're going to reverse that. As a matter of fact, it may not have actually went into action yet. So that one I don't even think that that's going to actually continue. And then the one for the personal financial data rights rule, that one wasn't going to even be enacted until 2026. So you could say that that one's already slashed, and that's not going to go anywhere. And just so you can have the sources, the first one for the personal financial rights rule is from Investorpedia. For the buy now, pay later, that one, you can go straight to the CFPB website, type in buy now, pay later rule. For the credit card late fee cap, you can go to Market Watch. All right, if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, and read everything about how we can help you. We do not charge anything for you to get started. We've never charged anything for anyone to get started. So read how we can help you. We do not promise overnight stuff. We don't do anything that is not above board, fully transparent. If you need your credit reports and scores, go to the website your3scores.com to grab your TransUnion, Equifax, Experian credit reports and all 3 scores. If you have debt collectors coming after you early in the game, grab my 3-pack of letters: statute of limitations letter, debt validation letter, cease and desist collection activities letter. Thank you for your time. Post your questions and comments. It's Stephen A. Williams, President and founder of thecreditrepairshop.com.